The benefits of investing in gold and real estate during a crisis are many. Let's look at some of them. First, both gold and real estate can hedge against inflation. Inflation is the rise in prices of goods and services over time. It erodes the value of money and reduces your purchasing power. Inflation can be caused by excessive money printing, supply shocks, or high demand. Gold is a hard asset that has intrinsic value. It is not affected by monetary or fiscal policies that create inflation. Gold can preserve your wealth and protect your savings from losing value. Real estate is also a hard asset that can increase in value with inflation. Real estate can generate income from rents or appreciation. Rents can be adjusted to keep up with inflation. Appreciation can reflect the higher demand for housing or land. Second, both gold and real estate can diversify your portfolio. Diversification means having different types of assets that are not correlated. This can reduce your risk and volatility. If one asset class performs poorly, another one can perform well. Gold is a safe haven asset that can perform well when other assets are struggling. Gold can hedge against financial crises, recessions, or geopolitical turmoil. Gold can also benefit from low interest rates, weak dollar, or high demand from emerging markets. Real estate is also a diversifying asset that can perform well when the economy is growing. Real estate can benefit from population growth, urbanization, or infrastructure development. Real estate can also offer tax benefits, such as deductions, depreciation, or capital gains exemptions. Third, both gold and real estate can generate passive income. Passive income is income that you earn without active involvement. It can provide you with cash flow and financial freedom. Gold can generate passive income by lending it to others for interest or fees. You can also sell gold for profit when the price goes up. Real estate can generate passive income by renting it out to tenants or businesses. You can also sell real estate for profit when the value goes up. These are some of the benefits of investing in gold and real estate during a crisis. Both investment options offer the potential for incredible profits while at the same time providing immediate portfolio diversification to protect yourself from the volatility of the stock market. The risks and challenges of investing in gold and real estate during a crisis, such as volatility, liquidity, taxes, and maintenance costs. Gold and real estate are often considered as safe haven assets that can hedge against inflation and economic uncertainty. However, investing in these assets during a crisis also comes with some risks and challenges that you should be aware of. One of the main risks of investing in gold is volatility. Gold prices can fluctuate significantly depending on supply and demand, market sentiment, geopolitical events, and other factors. For example, gold prices reached an all-time high of $1,896.50 per ounce in 2011, but then fell by nearly 50%. Gold prices can also be affected by the strength of the US dollar, as gold is usually priced in dollars. A stronger dollar makes gold more expensive for foreign buyers, which can reduce demand and lower prices. Another risk of investing in gold is liquidity. Liquidity refers to how easily you can buy or sell an asset without affecting its price. Gold is generally considered as a liquid asset, as you can buy or sell it through various channels, such as bullion dealers, online platforms, or exchange-traded funds, ETFs. However, liquidity can also vary depending on the form of gold you own. Physical gold, such as coins or bars, may be harder to sell than paper gold, such as ETFs or futures contracts. Physical gold also requires storage and insurance costs, which can reduce your returns. A third risk of investing in gold is taxes. Depending on your country of residence and the type of gold you own, you may have to pay taxes on your gains or income from gold investments. For example, in the US, physical gold is considered as a collectible and subject to a higher capital gains tax rate of 28%, compared to the lower rate of 15% or 20% for most other assets. Additionally, some countries may impose value-added tax, VAT, or sales tax on gold purchases or sales. Real estate is another popular asset class that can offer income and appreciation potential. However, investing in real estate during a crisis also poses some challenges and risks. One of the main challenges of investing in real estate is finding tenants and customers. The COVID-19 pandemic has created an unprecedented crisis for the real estate industry, as physical distancing measures have reduced the demand for many types of space. For example, office closures, work-from-home mandates, and travel restrictions have affected the occupancy and rental income of office buildings, hotels, and retail properties. Similarly, lockdowns, job losses, and income shocks have reduced the affordability and demand for residential properties. Another challenge of investing in real estate is managing maintenance costs. Real estate properties require regular upkeep and repairs to maintain their value and functionality. However, during a crisis, maintenance costs may increase due to higher health and safety standards, lower availability of labor and materials, or damage from natural disasters or civil unrest. Moreover, maintenance costs may not be fully covered by insurance or passed on to tenants or customers. A third challenge of investing in real estate is dealing with taxes and regulations. Real estate investors have to pay various taxes on their properties, such as property tax, income tax, capital gains tax, and transfer tax. These taxes may vary depending on the location, type, and value of the property. Additionally, real estate investors have to comply with various regulations and laws that govern land use, zoning, environmental protection, building codes, tenant rights, and consumer protection. These regulations and laws may change over time due to political or social factors. In conclusion, investing in gold and real estate during a crisis can offer some benefits but also some risks and challenges. Therefore, you should do your research carefully before making any investment decisions. The best strategies and tips for investing in gold and real estate during a crisis are: choosing the right location. Location is key for any real estate investment, but especially during a crisis. You want to look for properties that are in high-demand areas, have low vacancy rates, and offer stable rental income. You also want to avoid areas that are prone to natural disasters, civil unrest, or economic downturns. Timing the market. Timing is everything when it comes to investing in gold and real estate. You want to buy low and sell high, but that's easier said than done. One way to time the market is to use indicators such as the gold-to-silver ratio, the housing affordability index, and the price-to-rent ratio. These can help you gauge when gold or real estate is overvalued or undervalued, and when to enter or exit the market. Doing your research. Research is essential for any investment, but especially for gold and real estate. You need to do your due diligence before you buy or sell anything. You need to know the history, condition, and potential of the asset you're investing in. You need to know the market trends, risks, and opportunities. You need to know the legal, tax, and regulatory implications of your investment. And you need to know your own goals, budget, and risk tolerance. These are some of the best strategies and tips for investing in gold and real estate during a crisis. By following them, you can protect your investment and ensure continued profitability.